Alright, hey everyone, it's Elysium here. Just got a lesson 5, I believe it is, for you. Basically, this is going to be a lesson on taking profits. I decided better to do a bit of a video lesson with this one, just because I think it's going to explain it a little bit better for those of you who have no real understanding of what I'm talking about. I'll go through one trading strategy on this one very briefly. I'm going to go into this actual strategy much more specifically and with a bit more detail later on in the video lessons. But I just want to sort of hammer this lesson home, which is basically taking the meat of the move, taking the predictable part of the move. It's about not trying to be perfect. You don't need to be perfect with your entries and exits to make money. It's about maintaining your risk management, locking in some gains just for your mental health and also for your financial health, and really just considering every single time you're taking a trade, including during the trade, what the most predictable part of the move is going to be. So what I have here is a stock called TTOO, T2 Biosystems. Bio stocks have been pretty hot recently, so this is one I was watching. So as you can see here, as I went through in one of my lessons, we got resistance. It's pretty clear here. I'm looking at 5-minute candles here, but this is going over the span of several days. You can see, we had this touch here, touch here, touch here, touch here, pretty clear resistance being established. So as we started going along, you can see that the volume picked up a lot on this day here. We had another retest of this resistance, and we started winding up towards this resistance level again. So I'm going to talk about a breakout long. So this is a pretty typical strategy that a lot of people do, which is essentially buying the break above a resistance, because as I've discussed before, previous resistance becomes support once you break above that level. So let's have a bit of a look at what happened. So we had, after this clear resistance was established, we had this break of the resistance here and a significant up move. Now, this is pretty typical in a lot of stocks. Sometimes you'll see fake breakouts, whatever else, doesn't matter, as long as you're keeping your risk management, assuming that you know that should this resistance become support and fail, it's invalidated. You're not trying to hold it. If you go above this and it goes back below, assume that you failed the trade. It's an incorrect trade. The move is invalidated and you get out. But let's say that you are in here, you've decided to buy this breakout. You don't need to be perfect, right? If you're looking for a typical breakout, you're looking for a pretty significant move, especially when there's, increasing volume like we've seen here. So you're buying this breakout here. What I suggest is that you are trying to take the most predictable part of the move when you're trying to sell whatever your position is. Now, the most predictable part will obviously vary depending on the specific strategy, but you don't need to try and sell, at the top, right? You can take whatever, 5-10% gains, because these type of gains, when they're predictable moves like this, will add up. And these are the most logical kind of levels. You just got to keep it simple, like I've discussed before, and stick to them. Because you have to understand that the further you extend away from this level here, the less predictable the move becomes. Because the predictable part was right here. This is where you're breaking through. You're seeing that the sellers who have previously been keeping this price down have gotten out of the way. And that's why you've had this big upwards move. As soon as the buyer pressure starts to fade down, you can see obviously you had this big down drop here. And you don't need to be trying to hold through this, because is this going to be comfortable for you? Do you think you're going to, be up here and then you're going to see your profits go in half and you're going to be, happy with that? Most people don't handle that mentally, and that's how you end up selling randomly, not following your trading plan. But would you be buying this suddenly? No, you shouldn't be, because this would be not a strategy anymore. You're just buying randomly. So if you wouldn't be buying anymore at this level, is there any reason you should be continuing to hold at this level? That's what you need to be thinking about. So really what I suggest is that you should be taking profits along the way into strength. If you're shorting, obviously it's the opposite. So what I mean by into strength is that as it starts to push up and you're seeing this move, the move that you wanted to see when you bought this breakout, you should be taking profits along the way. Now, whether that means you sell your whole position or you sell your 50% of your position to lock in some profits, doesn't matter. Every individual is going to be different with that. Personally, I like to try and sell, 50% of my position and then, see if the next half can get to, a little bit higher. But I will never start holding through these random dips and choppiness, because when you're day trading, especially when you're starting out and you have limited day trades, you don't want to be holding things randomly when these stocks can just do anything. Now, I'll zoom out a bit more because you can see that this breakout did actually continue with a lot of strength. But again, at what point are you going to keep holding something like this? Now, if you really wanted to keep playing this, you could be selling into strength. You could be looking for a new setup to establish, new supports and resistances, because as we've talked about, you'll always find new supports and resistances. You can see pretty clearly there's multiple taps here. This sort of becomes the support area, seeing a lot of bounces from this area. You can see a bit of resistance up here, but it's pretty choppy, so you really wouldn't be wanting to trade this anymore. This was the predictable part of the move. So really, once you've taken the profits on the predictable part of the move, you wait for a new trade setup, whatever that might be. Now, as you can see, this ended up just chopping around, nothing really exciting, ended up dropping all the way back down to this area where you had this previous resistance, which had become a support, and really just falling below it now. It's just broken down underneath this and has just continued to fade. Now, this is pretty typical, especially in these lower price stocks, which is personally what I like to trade, because you get a lot of volatility, a lot of predictable parts of the move. And really what this lesson comes down to is just making sure that you are locking things in. You don't need to hold and hope. Now, this is very important because you do not know what is going to happen in this area. It could have just come straight back down to this resistance, which would become support, and just go straight through it. You don't know, but the most predictable part will always be these breaks of resistance and support, the bounces from resistances and support. Keep it simple. Don't try and overcomplicate things. Don't try and get into guesswork and assuming you know something that you can't know. Take the most predictable part of the move, lock in some profits, and you'll find that even if they're small gains, they add up over time. Don't underestimate the power of compounding. You'll find that if you can continue to take these small wins on the predictable parts of these moves, they'll add up over time. You can size up your positions as your account grows, and you don't need to be looking for home runs every single time, because most of the time you're not going to get them. And if you do, it's probably luck more than anything else, because as I say, the further you extend from the predictable areas, the lower your success rate will go down. So it's important that you stick to the basics. And the basics will be making sure that your risk reward is good. So when you're buying here, you can risk off this area here. So if it fails and goes back below there, you're getting out with a small loss. Now, you can calculate how much profit you're going to take based on your own risk reward ratios. So if you're, say, risking whatever it is, a quarter of a cent, half a cent, you could aim to just make, 10 cents. Sorry, yeah. And that's fine. If you've got a 2-to-1 risk reward ratio, if you're doing this consistently, even if you're only 50% of the time, you're still going to be making money over time. You don't need to be trying to rush this. Just take the predictable parts of these moves and get out. If it keeps going on without you, don't feel bad about it. Don't feel like you left money on the table. Don't feel like you've played it incorrectly. What you thought was going to happen, happened. You should be happy. You made profits. Don't just try and ride it out eternally because you think, wow, this, could keep going. And don't get emotional when it keeps going on without you and feel like you need to get back in because, oh no, I've missed out on whatever, 10% profit, 20% profit. That doesn't matter. Focus on what you have, not what you could have had, because the market will always be here. There will always be another opportunity like this. just focus on taking what you can get and getting out. Simple as that.